Hi everyone, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by Ashish Kyal Trading Gurukul. The learning series started by me and the research arm is known as Wave Strategy Advisors. This webinar is free and you should not act on what we discuss here because it's just from learning perspective, and I would appreciate that in case you want to learn more, you can visit the website wavestrategy.com. I'll also be discussing a lot of methods that I use in order to take trades in the market in the 2 days program starting tomorrow. I'm extremely excited to talk about those. Master of Technical Analysis that is meant for anyone and everyone. We'll be starting right from the scratch, how to plot a chart, how to look at prices. It's not necessarily that you have to be an expert already. And we'll also look at certain concepts like why 200 days average no longer work, what parameters should be selected for an RSI, because that all things will make a lot of difference. So if you have been following me over past 1 month, I have been talking about Nifty is repeating 2008, and we can clearly see that how vulnerable the markets have been all over the place on the downside. It has been a crazy ride, and it is going to be extremely volatile week, or probably weeks going ahead. It's not going to stop that soon. We will see volatile weeks. We will see equally sharp reversals on the upside and again sharp reversals on the downside. If you have a system and a method in place, you will be able to take advantage of those, and you will be able to take trades uh, based on certain systematic methods. So I'm going to talk about. I yesterday itself published an interim update or monthly interim update in which I have given levels of Nifty, and those are crazy levels. I know I'll be called crazy for giving those kind of levels, but I'm just passing on the message what I'm seeing on the chart. So anyone who is having access to my monthly research, I know you will be very much anxious looking at what is going to happen, and I'm not very optimistic about the same, because earlier my discussion started that this crash is comparable to 2008 even before it started. So I still remember it was 11,850, 900 levels when I came bold and said we will be moving down sharply, and post that we have fallen like below 8,000. Now that's something very significant. Nearly 3,000, 4,000 points of move has come in just short span of time. In fact, we have fallen by 4,500 points from the high to the low, and 2008 fall was 4,100. So we have already exceeded in terms of price. The number of points that we have fallen is more than 2008. Now imagine 2008 took somewhere around 8 to 12 months to complete the entire collapse, and we are here completing that in just 8 weeks of time. So 8 weeks we have corrected nearly around 4,000 points of Nifty, 4,500 points on Nifty, and that's something is very significant. The other comparison that comes into place because of this is the earlier fall in 2008 Nifty was from 6,300 falling by 4,000 points. Now that is in percentage terms 64.5%. Now if we compare equality of that with the current fall in terms of log scale, you can do your math. So I'm not saying we are going that way, but I am going to be prepared. I'm not going to be buying this rally. I'm not going to get into the euphoria if it goes up by 1,000 points. I think it's going to be providing opportunity to again place on the short side. This is the market. This is a bear market. I'm not sure how many of you might be there in this bear market in 2008, but I have seen during those days how it's going to be very much painful for people who are fighting against the trend. So do not fight against the trend. Stay in the direction of the trend. If you every time try to capture a low on the market, you are only going to be doomed. You are not going to make any kind of money. You are going to drain your emotional energy. Your financial well-being is going to be hampered if you just try to be against the trend. So very interesting day today on the Nifty. We can clearly see that we after 18 consecutive days. So in tomorrow's session of Master of Technical Analysis, I'm going to discuss about 5 trade setups that you can use immediately from Monday. One of the trade setups that I've been talking about is a bar technique. And as per that bar technique, if you look at it, it worked so amazingly well that I am myself thrilled looking at that specific method. Not a single day for 18 consecutive days we saw a close above the prior day high until today. Today is the first candle which has managed to close above the prior day's high. So that's the first sign that this downtrend might be taking a pause, and we might see a non-trending movement. Volatility might start cooling off. Option buyers are now going to lose money. Option writers are anyways not made money in this market, because you have to be very careful to stand against a running trend. That's what it is very important, that you are, if you are writing options, that 2 days of down move would have wiped your 3 years of profit. So you need to be very careful if you're writing options, and now is the time that you need to be careful even when you are buying options. So these are the situations where you have to apply some Elliott wave, Neo wave concept that I use, and those have to be applied very rigorously. So let me now share across the charts. I will be taking questions after some time. I'll share across my chart. What do I see on Nifty? And as I said, use it from the learning perspective, not from anything else. So if you look at this overall movement on the market, I think we are not going to be moving very easily. We are going to be moving in a very chaotic fashion over a short period of time. By chaotic, I mean we will be going up in like crazy. So we have already seen that from 7 800 we are back to 8 800 levels. So 1,000 points move on Nifty in 2 days of time, not even 2 days, and that's how the volatility is going to be. So if you look at this simple candlestick chart and you look at the pattern, you will realize that in this entire fall from the top till the bottom, there is not a single close that we have seen above the prior day's high until today. So today is the first close that we can clearly see, which has been above the high. So this indicates a pause in the trend on the downside. I'm just using the word pause. This does not mean you go long immediately now to ride this uptrend. This is just a pause. By pause, it can go sideways. We can start moving again on the downside. We can resume that. So it's just a pause. It's just an opportunity to get in the direction of the trend whereas and when prices confirm again. So I'm very happy with this kind of pullbacks, because this will give you an opportunity to re-enter into the trend on the downside. So I'm sure, let me just show you on an hourly chart what it looks like. So the most basic thing that you can do now in a trend, you should follow trend following methods. You shouldn't apply methods that are not convenient from trend following perspective. So for example, if you look at RSI in this kind of a market, it will not work for you. You look at RSI buying above 40, that's a blunder. I'm not sure who talks about it, but that's a blunder. If you do that in a bear market, take it from me, you are going to be doomed. So don't do that. Let us look at some very simple methods right now. What do we expect in the coming week? Let us just connect this trend line. This is a brilliant trend line. Can you see that? I'm just connecting the tops together, and the halt of today is exactly at this trend line. And if you connect the lows from this point, okay, now this trend line is not parallel. Let me make it parallel. So this looks like a parallel trend line. You connect the lows, you get this channel. I'm going to take an extreme low also on the downside. Now do not ask me why I'm connecting those lows together. All of those will be discussed in tomorrow's MOTA session that I'm going to be taking online. So if you connect these lows, this is the channel that I think is going to be looking like a very classical channel on the downside. We have paused exactly at this point of time. I'm not predicting that on a Monday we will open with a above the trend line, not below. But if we open gap down again on a Monday below certain support levels, which I'll mention in my daily research, that will be an indication the uptrend was only temporary and we are again reversing back on the downside. Let me put on RSI as well once again and show you why I think RSI shouldn't be used for creating long positions, but you can use RSI in order to create short positions. Now, how do you use something like an RSI for creating short positions? Let us try and look at that. Okay, I put it around here. Let me find out the resistance level for RSI since the fall started. This is the resistance level. Now, someone who has been talking about buying RSI, if it goes about 30 or 40 odd levels, you might have gone long all the way over here just to see it gap down and continue to move on the downside. As I said, you shouldn't be using these things in isolation to the market trend. It is extremely important you combine these methods together with price action, with channels, with trend lines, with candlestick, and along with Elliott wave and Neo wave, which I practice. So I think overall this movement on the downside that you are witnessing on Nifty is going to stay. We have seen this move extremely steep. Let's see on a weekly chart this fall magnitude. If you look at, let me minimize. If you look at this chart, can you clearly see this fall is much, much bigger than the entire history that you see here. Even beyond that, 2008 was only this much, and we have fallen so sharp. So this is the chart that I'm talking about. I think I have published in the interim update the entire pattern from this point onwards till the current point. We are in a diametric pattern, and this diametric pattern, we are in wave G right now ongoing. You can refer that research for the complete outlook on the long term or medium term outlook on Nifty. From the daily perspective, again, look at it, the magnitude of the correction. Now, people who are expecting a very, very sharp bounce back towards start of a bull trend, please beware. This is not a bull market. This is a bear market. The rallies that you see is an upside correction. So far in the bull market, whatever you saw was probably a pullback on the downside. So the corrections were on the downside in a bigger uptrend. Now the bigger downtrend has started, so the corrections will be on the upside, and the major trend and the best of the money that you can make is by shorting the market and not by going long. Trust me on that. I've seen it in before. When was the last time you saw Kotak collapsing by 20%, the X is going down 10% daily? Look at the stocks simply bleeding, and I'm sure you are, if you are holding those stocks, you are so anxious what to do with them, whether to get out of the market, park money into debt funds, or fixed deposit, which is giving a return of what, 6-7%, and post tax you don't even get that much. We are in a scenario, it's not only India, it's a global sell-off. It's triggered, the problem is the economic collapse which was bound to happen is also triggered uh, by a coincident epidemic or a pandemic that we are seeing, coronavirus. So that's adding fuel to the fire. That's not the reason for this collapse. That's adding fuel to the fire, and the government, central banks globally are finding out escape routes by blaming everything, the entire collapse, on a coronavirus. I'm sure that has resulted into a major downturn. And also, okay, I can clearly, there are some issues with someone who is not able to hear. Please check your micro speakers. So what I'm trying to communicate is what we are witnessing right now is something similar to 2008, but it looks even bigger magnitude if you look at the US market. I am comparing US not with 2008 now, I'm comparing with 1987 collapse. That's the magnitude of collapse that we are seeing in the global market. Crude oil falling towards $22 and below, that's crazy. It's not a positive sign. People talk about fiscal deficit improvement. What will you do of fiscal deficit if there is no growth? There is nothing. That slowdown, the global slowdown, is an indication that the crude oil prices have collapsed, and that repercussions you are yet to witness. What you are witnessing right now is just fiasco in the NBFCs, the banking space. Now the issues are going to come out with respect to the crude oil refining companies. Look at Reliance, look at ONGC. Those companies will start bleeding. Now that is the problem. The exports are not going to pick up. So even if crude oil is down, fiscal deficit will improve, but the exports are going to tank for sure. And with the current scenario of the coronavirus, it's not sending across a very positive signal. I think we are in a very big bear market, which is going to last for at least I would not say 6 months, maybe a year. So it can last that long. You need to embrace the volatility, be prepared. Only ones with a clear trading strategy methods, techniques, which has worked during 2008 are going to make money in this market by shorting, not by buying, by shorting. You might see sharp pullbacks of 10-20%, but use that as shorting opportunity. I would highly recommend do not buy this market. It's not a buyer's market anymore. Unless you are an intraday trader, you want to buy and make money quickly, do that. But the stop loss has to be far, far away because 200-300 points is a normal movement of Nifty at any given hour, not a day, given hour. If you look at yesterday moves itself from 7,800 to 8,400, that is 600, 700 points movement. Look at today, we moved from around 8,200 levels towards around 8,800, that's 600 points movement in a day. So if you are ready for that much of volatility, please trade the market. You cannot have a better trading opportunity than right now. You are placed in a very, very interesting scenario, a very difficult situation in terms of what coronavirus is doing across the globe, but a very interesting scenario what the financial markets are doing right now. So in a nutshell, I think there is a possibility of consolidation, but I'm not buying the rally. Let it go where it wants to go. The best of the money will be made only if you short the market at a given appropriate time, which I'll be mentioning in my daily research report. So I'll now probably take a few questions. Let me just check. Okay, 10-year bear market after 100 years, possibly. We do not have a chart of 100 years on Nifty, so I can't comment on that. On US, I'm comparing right now with 1987. I'm not comparing with 1929. 1929 was the Great Depression where US stock market collapsed by 90%. The indices collapsed by 90%. The stocks, forget about the stocks. So let's not do that. Let's not look at 10 years of bear market. If that's going to happen, we are going the world is going to change the way we know it. It's going to be crazy and chaotic, but I am not seeing it as a 10-year bear market. I think the correction which started in 2008 is still ongoing, and we will be completing that 10 years of corrective move with a huge panic, everyone leaving the markets before the mother of all bull markets will start. So that's going to happen is what I think. Bear market is good for stocks are discounted price long term, but for traders who do intraday and short term delivery trading, how safe is them trading during this specific period? So it's like I would rather say the bear market are the best period for a trader. You are going to make an amazing amount of money when you are trading in a bear market in the shortest possible span of time. But the risk is also high. So you need to have a very prudent risk reward ratio, money management strategy. Otherwise, you can lose equally fast. For intraday traders or positional traders, I think bear markets are the best markets that you can probably trade and make some quick money. But that comes with the caveat and condition: use a stop loss. You need to have a method in place. Do not just sell or buy anything just because your gut feeling says. You need to have a systematic method, and that is what I'm going to discuss about in tomorrow's 6 hours of webinar and on a Sunday. So total 12 hours, I'm going to talk about Master of Technical Analysis, how to trade this bear market. It's going to be extremely interesting. I'll just share across in case anyone wants to register for that. I can see a lot of you have already done it. So a lot of you also are from the mentorship batch, so you will be attending that. You can simply visit the website wavestrategy.com and you can see this banner, online and classroom. No classroom right now. There's an online session. You can simply click here and you will get all the details of the becoming market wizard that we are talking about. Master of Waves is happening, which is Elliott Wave, Neo Wave is happening on 18th, 19th April. I'm still not sure whether we'll do it a classroom or an online, but we'll have to see it. But tomorrow's MOTA is an online session. So for any queries or doubts, you can directly reach out or visit this page and reach out to these numbers which are mentioned below. So that will help for sure. Okay, let me take on a few more questions now. I'll not be able to take all the questions. For intraday trade, Elliott Wave and Neo Wave, that's brilliant. Actually, I combine Elliott Waves along with many techniques that I discussed. I think you are in the mentorship batch service. So I will be combining these methods together, and you will be simply thrilled to see how amazing it was. So I'm going to do that. Time cycle loaded. Let's derive it in the course. So we will look at time cycle today. I don't think we will have that much time. Um, okay, you are not in the mentorship batch, so Savi, I'm sorry, I'll not be able to discuss these things because it's in the mentorship batch. If you want, you can register for the June 2020 batch. So I'll not be able to talk about those things. Is it advisable to shift from equities to commodities? Please advise. Big fan of your work, Ashish. Mohammed, thank you very much. No, you can't really shift to anything. Everything is collapsing. It's equities, it's crude, it's bonds. Everything is collapsing. So this is the period you need to safeguard. Sit on cash if you are not a trader. Go short if you are a trader. So do not shift to any other asset class. Everything will go down like a pack of cards. This is just a start. Till where pullback is expected? I'm not sure. If you're asking me about a pullback on the upside, I will be mentioning in the daily morning research report. On a Monday morning, you will get till what the pullback is expected. The downtrend is the bigger trend. So downtrend is not a pullback. The uptrend is a pullback is what I will say. Then I have up to what point on Monday? Again, Sunil, I'll not be able to comment what point we will go down and up because for that we need to refer the research report. For very interested but out of funds, Madhav, we will discuss that. So please drop an email with and my team can discuss. For market up move today, there are no reasons. So the question Vikas has is, what is the reason for an up move? What is the reason for the down move? That's the problem. If you are busy looking for logical reasons for the market movement, you are going to be not getting anything. You are just going to be looking for the reasons. Market moves based on the collective social psychology of the crowd, social mood of the crowd. It is not driven for any reasons. You will get the news and the reasons later on. Maybe you will get some reason later on during the weekend that that's the reason why market moved up, but there is no reason. It's just you have to look at it from wave perspective. It goes down in 5 waves, it pullbacks in 3 waves. That is what we are witnessing right now. So with central banks going along with printing presses, can it be inflationary? Gitesh, a very interesting question. Can it be an inflationary scenario? Try to imagine. US is now having an interest rate cut to near around 0% with quantitative easing, and Dow Jones still crashing by 3,000 points on that day. Do you still think that government can is responsible for inflation or deflation? No, government actions are only lagging indicator. They do not decide an inflation or a deflation in an economy. They probably take actions once they see a certain amount of social mood via bonds, via stock market. They are lagging indicator. Their actions do not change the trend. Their actions only try to curb the trend which is ongoing. So government actions will not result into inflation if there is a very strong negative social mood that we are witnessing right now. Okay, I'll take last two questions. What time frame to look for short selling in trading with Elliott Wave? You can look for 15 minutes, 20 minutes, 30 minutes, hourly. I will not be able to talk about it right now, but you need to look at various time frames for sure along with that. Ultra short term funds, be safe? I think so. I'm not an expert on that, so you can try all of that. Indication about the bottom of this bear market? Absolutely, Rajendra. I have published the monthly research interim update yesterday, giving the levels where we can expect a low in this bear market. I have done that. By what time frame? Also, I have done that. Way diagonal style, I'll not be able to comment on that. So, will there be introduction to time cycles tomorrow? Not really. Time cycles we will be doing in Master of Waves, so there will not be introduction to time cycles. Let's see if time permits. I will do that on a Sunday. Saturday and Sunday is the class, so Saji, we might have try and do that. Free. No, tomorrow's webinar is a paid one. You can visit wavestrategy.com or contact us on 9920422202. So I think that's it from my side. I will not be able to answer all of the questions, but I am very much excited to look at you from, to meet you all on a platform tomorrow at 10 a.m. and on a Sunday at 10 a.m. for 6 hours. We are going to have some detailed brainstorming discussion on what to expect from the market on a Monday with technical analysis, with a lot of concepts like moving averages, indicators. You might say, I know that already, not the way I look at it. You have to be placed for the bear market, and you might not have studied the bear market all over a decade because that was only in 2008. Great, then. Thank you very much. Do visit the website wavestrategy.com, and I'll be uploading this on the website. Follow me on the YouTube channel at the rate Kyal Ashish. This will be available there. There's a Telegram group or channel, Elliott Wave Strategy. You can probably join the Telegram group, and you will be getting a lot of charts and insights from there as well. So look forward to a lot of you tomorrow, and have a wonderful, safe place to stay back. Do not go out as being advised. These are unprecedented times. I think these are the times we need to be more sensible than careless, because one mistake and it can cost your life. So stay back, stay safe, and hope India and globe recovers back from this pandemic quickly. But for the financial markets, I'm not very hopeful right now. Thank you very much.